YouTube, what up? So today I'm gonna make a video. I've watched several YouTubers. I've seen people on Instagram, Twitter. This is probably one of the most misunderstood financial strategies I think there is. Asset-backed lending, velocity banking, SBLOCs, margin loans, like just that entire, all of those are under an umbrella, but it's very misunderstood how it works, how to use it, and why it's the ultimate wealth building strategy. So I'm going to explain this in what I would call the simplest way to understand it. And not endorsing, this isn't financial advice. I'm just giving my opinion. I'm just throwing this out there so people can stop acting like this is only for ultra high net worth individuals, because it's not. This is exactly how I run my finances, and there are people who do it on YouTube. They just don't explain it in the simplest way. And to me, that's a little bit disingenuous. Okay, so the buy, borrow, die. Let's talk about it. So a securities-backed line of credit is essentially a margin loan. You have to understand that in practice, they're the same thing. The reason people are confused is because they have two different names, so people think they're two different things, but in reality, they're not. A margin loan allows you to borrow against your portfolio, access liquidity without selling shares. A securities-backed line of credit does the same thing. They both have interest-only payments. If you were to make a Venn diagram, right, and have margin loans over here or an SBLOC over here, they would have multiple things, multiple similar, like there would be like, okay, this is similar, this is similar, this is similar. There are differences, but if you're using it for the buy, borrow, die strategy, they're the same. No one is saying it. No one is saying that. I'm not charging people to know this. I'm not doing none of that. So I'm going to give you my specific way that I use this to my advantage. So now, again, I'm not endorsing anything. I'm just telling you what I do, how I do it. I use Robinhood to do this. Why do I use Robinhood to do this? When you have Robinhood Gold, the first $1,000 that you borrow against your portfolio using margin is interest-free, 0% interest. So let's just say, for example, I get paid $2,500, right? And I wanted to use $750 for whatever bills I have for that 2-week period, whatever, right? What I do is I get paid, I invest all the money in my checking account, the exact amount I buy in shares. And since my portfolio is so big, my liquidity is well over 25,000. As soon as I buy my shares, I can take out $750 at 0% interest, like interest free. So okay, so this is where it starts to get complicated for people. Sorry for the pause. How do you pay it back? So there are two technical ways that this loan can be paid back. But using velocity banking, once I get my next paycheck, let's just say it's another $2,500 just to make it simple. The difference, right? 25 minus 750, that difference is what I would invest in some more shares and then take another 750 out. Therefore, all the capital is compounding, right? Let's just say I used more than the 1,000. Let's just say I used 2,500. Specifically in Robinhood, I would only be paying interest on 1,500, not 2,500, because 1,000 is interest free. This is the main question that people are being disingenuous about. How do you pay off the loan? They see Elon Musk do this. They see Jeff Bezos do this. Anyone can do this. And the dividends that you get, they pay back the loan. Like, why is no one just saying that? If you borrow against Coca-Cola, right? You got none of the Coca-Cola stocks. The dividends that you get quarterly would buy back the equity that you're using. It's that simple. The money you put in the portfolio buys back your equity. It's no different from a HELOC. And everyone is making this seem like, I don't know. It's like everyone just keep making this so complicated. Velocity banking is where you, in the idea of the stock market, is where you have a whole bunch of liquidity already built up in a, not financial advice, a boglehead style and portfolio, and you borrow against it. Your dividends, appreciation, plus the income that you put back in there and that you invest the difference, it builds up your withdrawable equity and you pay back your equity. Why do people keep saying, well, how do you pay off the loan? How do they pay off the loan? Dividends, appreciation, and by continuously putting money in their brokerage. It's that simple. You only need $2,000 to start borrowing and to get yourself in most brokerage accounts. What about a margin call? This is where having a highly diversified 3-fund, not financial advice, 3-fund boglehead style portfolio, and to try to figure out how to make as much money as you can to invest as much money as you can. Like, that's it. That's the strategy. That's buy, borrow, die. That's velocity banking. That's margin loans, SBLOCs. I just explained it all. It's that simple. You build up your brokerage. You can leverage the brokerage. You pay back the margin loan, SBLOC, by simply, you get dividends to help you pay it back. You also get appreciation, but you also, as you're continuously putting new money in, you're buying back equity that you used. That's it. That's it. It's that simple. And the spread, remember, is just that, okay, I use Robinhood, so I only know Robinhood. But at 5%, let's just say, for example, $1,000 free, another $1,000. You know what I'm saying? You only, that's pennies. That's like, that's you would be able to borrow that equity for less than $20, $25 a month. Way less than that, actually. I'm just kind of freestyling on it, but, and that's the whole purpose of this. That leveraging your stock equity, you have a locked in loan with interest only payments indefinitely. There is so many disingenuous people on YouTube trying to sell this information. and I don't understand why. It's like they refer to it, oh, well, you can, you know, buy stocks and borrow against them. It's like they're making it hard enough for you to have to want to pay for some subscription from them. I'm gonna leave this video up. I'm gonna leave this video up. I'm gonna see what type of views it get. I'm gonna put a lot of SBLOC, margin loan, buy borrow die. I'm gonna make this like that type of video because a lot of people are like, they're not necessarily lying. They're just not making it simple enough to where you could just watch a free video and like just learn it from a free video. So I'm gonna see what this video do as far as views, and if someone want me to break this down further, I'm willing to do that. So that's what we're gonna do with this video. So see you next time. Like, comment, and subscribe.